All right, let's get started. I've prepared just some numbers for you, PPT. They're just getting them up right now. And for those of you who do know me, I kind of bring a little of the international flavor to the market. And I guess according to SPAC Jeopardy, not many people know who I am. So, I am the co-managing partner of Markham Asia and MVP Global. The cross-border transactions, and we've seen a resurgence in the market. And one of the things that I think is so interesting right now is where it's coming from. I think we all know the numbers, but the interesting part is where it's coming from. Can they move on to the next slide? As we see, it's up 64% right now. There's been almost 33 billion raised in the market. And you can see that's what driving it pretty much is frontier tech. We've seen deals right now. There's a slowdown right now in China because the CSRC is not approving any deals right now. But you see that there's sharp increases from places like Europe and the Americas. The pipes, right? They're back on the table right now because we all know getting SPAC deals done without a pipe is near impossible. Let's move on to the next. These slides are available for anybody who wants. If you can just email me, I'm happy to furnish them with you. And there's several deals right now, billion-dollar deals, all taking place outside, mostly outside the United States. But they're coming to the US markets. And what I can tell you is most of the chairwomen and chairmen that I speak to, especially over in Asia, everybody's talking to me about the same thing. And that's about going global. And I think the US markets are the gold standard of the markets because of some of the things I've listed here. Mainly, they're the deepest, most diversified markets in the world. Number two, very few other markets allow these companies to do add-on rounds, which draws them here. And as I told you, when you're going global, having that global recognition from the US markets is very, very valuable. Next. My firm, we're auditors. So to take 1 minute to just explain what we do, our firm specializes in cross-border transactions. We have two firms, MVP Global and Markham Asia. Markham Asia operates in Asia and addresses all Asian companies. MVP Global does everything else. And we help companies go public, and we specialize in cross-border transactions, which we're seeing more and more of.
Thanks, Drew. Thanks for setting the scene. Paul, coming over to you, be really interested in some of your insights in terms of the countries that you see as good geographies for becoming public companies through a SPAC.
Sure. Thanks. Just to introduce myself quickly, my name is Paul Wood. I am the co-head of SPAC banking at BTIG, active in both SPAC IPOs, but also advising companies accessing the capital markets in the United States through the SPAC product, and that includes capital raising. So as we talk about good countries and good companies and examples that Drew had up, a lot of them did raise capital as part of the go public process. So we'll get to that in a minute, just as far as what capital raising looks like for some of these cross-border deals. But specifically about geographies, it's great to see the different countries represented with deals that have closed. And I'm really focusing on this capital market cycle. So really that started 12 to 18 months ago. And it really started with Kyivstar coming out of the Ukraine. And that was a phenomenal transaction that closed with minimal trust redemptions. The first Ukrainian pure play story to list in the United States. It was a spin out of Vion. And it was amazing just to see the reaction that the US market had to that, people weren't really sure immediately what the response would be. So as far as Ukraine, That demonstrates that even Eastern Europe is an attractive market. And then you look at some of the more recent deals. The latest de-SPAC to close that is now publicly listed is Einride, based out of Sweden. That follows other Scandinavian companies like IQM in Finland to go public. So, and then we could go back to the last cycle when we did a deal in Norway, but with Freyr. But both Western Europe and all these regions are included. France certainly is included. If you think about all the quantum deals, all the technology and skilled scientists that are out of these European institutions, it's where a lot of these companies are incubated, grown, and now coming out of. So for me, I'm really, a lot of the biggest deals have been Western Europe or all of Europe. I mean, Asia's always been a constant theme. But in this trend, I think Europe is particularly interesting.
Thanks, Paul. Certainly agree with you on the Kyivstar deal. It was a real pleasure to work on that, and it's great to see how it's gone since the de-SPAC. I'd also be interested, Paul or maybe Ali, in terms of sectors. What are you seeing at the moment in terms of which sectors are hot? I think we heard about longevity yesterday, but what else? Paul, maybe you can.
As far as sectors?
Yeah.
Again, Drew mentioned really deep tech. We call it deep tech is one. If you see the thematics playing out in the United States, they're finding great companies to take public in the U.S. We saw Inflection go public recently. We saw Boost Run go public recently in both AI or quantum. And now you're seeing those European competitors come out through like IQM in Finland, Pascal in France, and then on the energy side, you're seeing Nucleo that just announced out of France in the energy, the advanced modular reactor manufacturer and nuclear fuel manufacturer. Like anything that's energy creation or energy storage right now is very attractive, and quantum is particularly attractive.
Sure, thank you. And Ali,
yeah, just to add on to that, I would say we worked on, as Paul just alluded to, which was Crane and Xanadu, and that was the first pure play for quantum computing. And I would say that's one of the most successful de-SPACs that I've worked on and I've seen in that sector, but I've also seen a lot for nuclear and pure play in that area as well. It used to be, AI, I think, was more dominant previously and not so much as now, but I think a lot of the targets, that's what we see are foreign targets. And just to add on to what Paul had said, I think that trend is going to continue, and I think it works quite well with the Cayman structure, which I can go into, or I'll let you ask the question.
Thanks, Ali. Yeah, I mean, just more generally, obviously, as Cayman Council, every transaction for us is a cross-border transaction, has that Cayman element, and we're gratified to see that almost all SPACs now are formed in Cayman. But I think it might be helpful if you can sort of touch on some of the reasons why that's helpful in a de-SPAC context, but also more generally why Cayman's the jurisdiction of choice now. Yeah, I mean, now we see most, for example, just even, IPOs, de-SPACs, I mean, all of the Cayman formation entities, all of the SPAC entities are Cayman formed. And I think that plays to tax neutrality. I think flexible corporate structures that lead into international deals being incredibly successful, for fast execution, just because the way that it works and the foreign entities are then able to access capital markets in the US, which is advantageous. I think the Cayman structure, a lot of the time just within the governing documents itself, because of the flexibility, and you have to also make sure that those are prepared correctly, because you want it to be deal friendly when you go into a de-SPAC at the IPO stage. But I think that you look through all the voting thresholds, directors, shareholders, there's just a lot of progressiveness in that instance that allows for these deals to be sort of seamless in a certain way. And I think that also adds to the jurisdiction itself being, the favored over 95% of IPOs now are all Cayman formed. And I think that trend is going to continue. I agree.
Which is great for us.
Preaching to the choir. Thanks, Ali. Drew, if I might come back to you, perhaps move on to some more technical matters. What are the special issues with regard to auditing, accounting prep, and public company readiness that you see with these sorts of cross-border transactions?
Well, I mean, the cross-border transactions tend to be a bit more complex. And I think one of the things that we try to work with clients, because the most important thing for our clients today, it's being done on time. I've really never met a client that actually understood what I did. Nobody's ever come to me and said, Drew, these are beautiful work papers, the numbers line up, and everything's beautiful. And as much as I know everybody's concerned with cost, there's actually no amount of money that you can pay me as an accountant that's worth you missing your IPO window or filing late, because the ramifications can be tens of millions of dollars. So what we advise our clients, especially in this kind of environment right now, because the environment has changed. And the change is that it's moving now from quantity to quality. What we're seeing in our firm right now, the way I describe it is when a typical business raises prices. And when you raise prices, you typically lose some clients, but those are not typically the ones that value your work, and the rest of them go on. And what we've seen right now is we've lost some of the smaller clients, and the new clients we're seeing are much more substantial. And what we're advising our clients right now, the ones that are preparing to go public, is to prepare early, because the audit's probably the one thing that you don't control. We have to do our work, and whatever time it takes, and we can't sign until we're comfortable. It's not like an investment bank or a lawyer that maybe you can pay a little more money and they can get done faster. And the audit tends to be the big stumbling block of these deals going forward. I think there's an enormous opportunity right now for the SPAC business, because you have these few companies right now that are preparing to go public with potentially trillion-dollar valuations, and they're going to suck up a lot of the allocations in the market. And one of the nice things about the SPAC business, particularly for mid-tier companies, is the trust money's already set aside. You're not competing for that money. So I think that there's enormous opportunities, but it's all based on preparedness. And given the discretion that NASDAQ has right now, and the way they're using the discretion, and they're using it in a very discretionary way, meaning they're not telling us why, they're just saying yes or no. Everything that you can do to your deal to enhance the credibility is going to give it a better chance to succeed.
Yeah, thanks, Drew. I think that's been a theme running through a lot of these panel discussions. Preparedness, involving the advisors early on in the process is where you want to be in terms of making these deals happen.
No, I was going to say, for those of you that know me, and apparently not many here, I work in Asia, spend a lot of my time in Asia. And in Asia, one of the last things that people hire when they do a deal is a CFO. The last person, Everybody wants to know, who's your CFO? And they say, we have to hire one. And hiring really super qualified people can bring enormous credibility to your company. I recall years ago, Badu hired this woman, I think it was Jeremy Lin, and she was ex-CFO, I believe, of General Motors. But the point is, she brought enormous credibility to the company literally overnight. And given the environment that we're in today, anything that you can do to enhance the credibility of your deal is going to be a big, big plus.
Thanks, Drew. Paul, turning to you, I'm sure you've got some reflections on what Drew mentioned, but I'd love to hear some of the structural considerations when BTIG are taking a non-US company public.
Sure. Yeah. First, to the audit point, I agree. It is no matter how prepared you are, something's going to come up in the audit somehow. Like you're not going to realize that something needs to be accounted for differently, and it's going to expand whatever timeline your banker put in front of you on the Gantt chart. So I agree that that is certainly a critical element. But getting everything right up front and structurally, and I think this is really about conversation with the lawyers, depending on the jurisdiction, is how do you structure that merger? And each country will have different rules, different tax structures. I know in Canada there's going to be a different tax structure depending on where the majority of the shareholders are, and if you're merging with a U.S. or a Cayman SPAC, that needs to be contemplated before you draft the business combination agreement. So these things, as you do a cross-border deal, they definitely take more time than just a U.S.-based company going forward. But it's not in that much more time. We're talking about weeks. But you do need the team that's gone through the motions before, that understand the issues, so that you can get ahead of everything. Because we've seen it too often where these things surprise you at the end, and you're wondering why the F4 hasn't been approved yet.
Yeah.
Let me just add quickly. Most of you in the audience, right, represent probably mid-tier micro-cap companies. And the best advice I can give you, especially as it relates to what I do, getting internal consultants. Most of the time, these companies are young companies, and they don't have the resources to actually bridge between what the requirements that they have to meet and the actual resources that they have. And being able to have a consultant that will be able to identify all the problem areas early will save the company enormous amounts of time and money. And the only other advice that I would tell people is if you want to be a successful public company, you better, at the end of the day, own 85% of your investors' trust and confidence. And I'm not here to promote different professions, but that requires IR. And that's the professional mouthpiece of the company. And they're as important as the lawyers and the accountants too, even though it's sort of like they get left out of the mix many times. But poor communication among your investors is a quick way to disaster.
Thanks, Tree. Kind of wishing we had an IR person on the panel now to throw to, but Ali, coming to you, we've obviously heard a little bit about the accounting and from Paul as well in terms of the structuring and how important that can be. Cayman, obviously, like one of our key selling points is flexibility, the ability to get things done on a timely basis. But I know
and the nice weather, right?
And the nice weather, of course, yeah. But I know you've seen pretty much all the sort of structures or domestications that could come out of the woodwork. So maybe you could just tell us about a few Cayman structuring points that you've come across.
Yeah, I think that's it's a really good question. Recently, usually the standard is a domestication outside of Cayman, but what we also see, and for one example, going back to Zenandu, which was actually also included a plan of arrangement as well as a domestication. And then it had to be tied to an acceptance of that domestication, redomestication into Ontario, as well as then the timing is a few days later to get the plan of arrangement between both of the entities, so the Cayman SPAC as well as the Canadian entity, to be approved, court-ordered. So in order, for example, like a transaction like that to occur, I think we signed the BCA was in November, and then we closed end of March. So that's that's like 5 months of intensity to get through the registration statement, to confirm, to get the structuring and everything. So you go through that, but then the end, closer to closing, you have to make sure the timing for all of this in each of the jurisdictions lines up, because this entity also, once it did go through and close, it listed on 2 separate exchanges, the Toronto Stock Exchange as well as NASDAQ. So there's a lot of planning that goes into that, and I think one of the aspects that you really, really need to be aware of is the timing. For example, Andrew and his team are quite well aware of this, but when you have to go through, you have to get, through a domestication is a certificate from the Cayman Islands registrar. So once you get that, that also needs to go to your either Canadian counsel or the, current counsel, U.S. counsel, whomever it is at that time, for them to be able to enact and affect their transactions. So there's like a certain timing that you cannot miss. So the documents need to be in order. All of this needs to be discussed and organized ahead of time, just because these deadlines cannot be missed, especially when you have like a court, order to be able to approve a plan of arrangement. All of that needs to be ahead of time. So I think planning and organization with the deal team is really, really important. I think another, in terms of the standard domestication, is you always want to make sure that when you do deregister from the Cayman Islands and re-domesticate into another jurisdiction, either Delaware, we're doing another one with Spring Valley and General Fusion that has not yet closed yet, but that's going to re-domesticate into British Columbia. What you need to do is you need to make sure that you're not deregistered in one jurisdiction and not registered in another. So again, that's the certain timing that you need to be well aware of. And I would say in another aspect is, another type of structure is we look in the foreign entities is like dummy mergers. So you have 2 separate mergers going on at the same time, usually all geared towards tax structuring. And again, you have merger day 1, merger day 2, but it all needs to be organized because you have to be able to execute effectively.
Yeah, thanks, Ellie. I think we're all familiar with chasing those either merge certificates or domestication certificates with the registrar. So certainly a well-trodden path on every DSPAC. Paul, if I may come back to you. We had a panel earlier on dual-track processes, IPOs versus DSPAC, but I'd be interested on your reflections and what you're seeing in terms of those.
Yeah, it's a lot of times it's really driven by market conditions. You could be a great company and the capital markets just aren't there to support your business at your stage in life, or there's a structure element, an ownership issue that it makes sense to go public through a SPAC. We've also seen in this wonderful window we're in now of companies that didn't think that the public markets were open to them, and now they're starting to see that maybe that is a path. That window opens and closes pretty quickly. The SPAC market is a much more consistent process that when you have the right team around the deal, you know what the timeline is and you're going to get out and you're going to be publicly listed. So to me, most often it's not really a dual track process at all. You're not going to get out to the public markets because you have all of the banks lined up in 5 years worth of backlog, and you got to get SpaceX out before another company can list, next week. But really, you're not going to get out for 18 months because you're that far down the queue. Unless you're a $5 billion company and you're pristine in your ownership structure, you're going to be looking for an alternative path to the capital markets. So I don't really think it's it stops being a dual track pretty early on.
Yeah, thanks, Paul. And the other thing I'd be interested to hear Drew or Paul's view on is the attractiveness of the US markets versus other global markets in terms of the depth of that liquidity and the pricing differential, particularly for overseas.
Is there a bigger discount for US or for non-US companies that are looking to list in the US versus their equivalents in the US? Perhaps. Back in the last cycle, the old adage was you needed to have an investor from that region really underwrite you and be a part of that pipe raise before the first dollar in the United States was going to show up during the pipe raise. That's not the case. You can raise hundreds of millions of dollars in common equity for European companies, and it's been done recently, and the first dollar is coming from a U.S. institution. The other thing, though, it's hard to talk about discounts for some of these companies because, we're not allowed to, projections are less common in these transactions when you're going out to market. And so you talk about milestones, and you talk about where you are in your development of your technology, in your commercialization or the acceptance, and where you are with customers and converting agreements. And so valuation becomes sort of it's definitely relevant, but it's harder to put like a percentage of where this is. You're really looking at kind of where you are in your development cycle, and then having conversations with investors to make sure that you're not wildly off the mark, because the growth these companies are experiencing are going to blow through whatever valuation that you want to put on a 12-month forecast.
I would add two things to that. I have the international aspect on this. I just came back from Zhengzhou, China, and I spoke at the Forbes Under 30 Entrepreneurial Conference there. And some of the things that I saw there are just insane. And I believe over the next 10 years, a majority of the unicorns, especially the industry disruptive ones, are going to be coming from Asia, not the United States. 5 years ago, 95% of my business was in China. And today, that number is about 50. And the other 50 is coming from places like Singapore, Malaysia, Indonesia. If you're familiar with some of the demographics there, they're incredible. Philippines, Vietnam, and more recently, a lot from Japan. So I think we've came from a period, which I know when you mention names like China, people think of discounts and being uninvestable. But I think going forward, I don't think you can afford to not invest in places like Asia right now. 5 years ago, I don't think anybody in this room could even name me a company in China that made anything. And today, these companies, and I'm not just limiting it to Chinese companies, but Asian companies, they're done being the suppliers. And they're becoming the brands now. Look at DJI, 70% of the global drone market. BYD, largest car company in the world. Detroit's becoming irrelevant. So I would say in conclusion that you have almost 200 SPACs out there right now. They're all on a clock. And I would imagine no matter where you are, if you're a good company that has good cash reserves and that's making money, the competition for you is going to be fierce.
Thank you, Drew. So we've all, from our time in the industry, got a few war stories, SPACs that have gone really well, SPACs that haven't gone really well. But Paul, in particular, I'd be interested to hear what are the characteristics of a de-SPAC target that plays well with the SPAC market?
Again, we started with Kyivstar, right? That was like the first example I gave, and that had like excellent management. An existing company doing $900 million of revenue and $500 million of EBITDA, and a challenged geography, right? And so I think everybody was surprised by that one having the characteristics of a great de-SPAC, but it really did. Other than where it was doing business because of the conflict, it was a great company. And that's a different one. That did actually have a pretty good discount story to it because it was really, it's a telco and there's plenty of public comps. But when you talk about some of these growth technologies, these deep tech companies, it is the first thing that people are going to see is the CEO. When you put a very good CEO in front of an investor, that conversation is so much different. So I think it really starts there. And these are all founder-led businesses that, to your point, add their support team on top. They add the CFO later.
Right.
They add IR later. And they're really, these CEOs are the ones telling the story of how they became, how they started, what they're doing now, where they're heading. And so it's really the credibility of the CEO to me in these deep tech spaces. It's where it starts. And then second is who are your customers today, right? You might be in a test period with your product. Who are you testing it with? Are they an investor? And does this product or this concept have a future, right? Is this a science project, or do people really believe that there's a usefulness to your business going forward? Why is it a good public story? And that's where I think people miss I think that last part is where companies can be so right and really mess it up at the end, is not giving the people around them the opportunity to explain why it's a good public equity story.
Well,
they forget.
Yeah, I would add to that. I mean, many of these companies in the past have lived off the premise of growth and innovation. And I think in today's market, if you want to be recognized as a good company, you better be able to explain to me crystal clearly how you make money. I think that's critical today, and it's something that many companies don't explain. So I think that's like one of the most critical parts. And I would say meeting the minimum standards for listing today, I don't think is going to do it. And, correct me if I'm wrong, but if you're a concept company, that's probably not going to do it either. Obviously, most of the money right now has gone into tech and AI, right? Both public and private markets. But I would say if you have a product and people understand the product and you can explain your business plan, then you should have a great chance of being funded. It's, like I said, it's about quality now, not quantity.
I was going to hijack one of the questions just to ask generally, but do you think the minimum standard is going to have an effect going forward?
Oh, it's had a, I mean,
Like, in
I've
terms
had a
of
lot
these
of
growth
questions.
companies-
They've asked me a lot of questions like, how have the tariffs affected especially Asian companies? And I mean, they have had an effect, but I would say not nearly as much as the changes in the rules. Because especially for Asian companies, moving the bar up to 25 million is considerable.
Yeah.
That's a high mark for them to meet. And I think the main reason that that was done is because most of the deals done before this was something like 8 to 15 million. And if anybody's ever heard me speak before, I've told people, you want to raise $8 million? Go talk to your gardener, a housekeeper. They have it. You don't need to go public. I mean, that's ridiculous. And the problem was in those deals, there was no due diligence being done because it was all friends and family money. And I think the idea was to raise the minimums to a point at which they believed there would be institutional participation. And with institutional participation comes risk and comes due diligence. And that was supposed to work, and I believe it did work, because that's what we're seeing in my business right now. Less clients, better quality.
I want to make a point. That's a great point. Better quality. In this cycle, we've seen better companies, higher quality companies going public through SPACs, and they're attracted to higher quality sponsors. Particularly the sponsors that are repeat sponsors. They're attracting really good billion valuation companies that should be public and will be public, and that we're seeing more of that than ever. There is a subsector of SPACs out there that are highly structured and small. I do not count them in the 200.
Right.
That to me is a separate part of the industry.
I agree.
And I don't think that you need, every SPAC is going to end up merging with a company.
No.
You might have
We
had
know that.
Right, but I think some other people might think that you should get a deal done at any price, and I think that was the problem with the last cycle that I would love to see avoided in this cycle.
Well, that's the old expression. Every deal's a great deal on day one.
Paul, I think that's a perfect place to leave this, and the words that people should take away with them. So thank you for that, Paul, Drew, Ali. You've been fantastic. So thank you very much.
Thank you.
Thank you.
Thank you, everybody.
Thank you very much. Good job.